South Korea's benchmark KOSPI continued to fall, dipping below the 2,200 level on Wednesday, the lowest in more than 2 years. In response, the government and the Bank of Korea decided to inject a combined 5 trillion Korean won, or over $3.4 billion to buy back state bonds. The government also announced plans to reactivate its stock market stabilization fund. Shin Ha-young with the detail.
Volatility in South Korea's financial markets has been growing. South Korea's benchmark KOSPI ended Wednesday's session below 2,200 points for the first time in 2 years and 2 months. It closed at 2,169, falling almost 2.5%. The South Korean won continues to lose ground against the US dollar. The exchange rate at one point crossed 1,441 for $1 during Wednesday's trading. In response, the government has decided to inject 2 trillion Korean won, or almost $1.4 billion to buy back government bonds to stabilize the market starting Friday. The decision was made during a Ministry of Economy and Finance meeting on Wednesday. The Bank of Korea also announced that it will carry out an emergency buyback worth 3 trillion won, or over $2 billion starting Thursday. On the same day, the Financial Services Commission revealed its plan to reactivate the stock market stabilization fund. The fund, worth some $7 billion, was created in 2020 in response to a stock market plunge that followed the COVID-19 outbreak, but went used due to the market recovery. Meanwhile, at the Ministry of Economy and Finance meeting, First Vice Finance Minister Bang Ki-seon urged relevant ministries to be fully prepared to respond to the market and to review measures to stabilize volatility. Shin Ha-young, Arirang News.